Hi students. So we'll continue with the golden rules of accounting. We have completed the golden rules of accounting and we came to know what has to be debited and what has to be credited, right? So with the personal account we came to know that the receiver has to be debited and the giver has to be credited, right? By the real account we came to know that whatever is coming into the business that has to be debited and whatever is going out of the business that has to be credited, right? And with the nominal account we came to know that expenses have to be debited and incomes have to be credited. Expenses, losses have to be debited, incomes and profits have to be credited, right? So we came to know all these things, but what are the assets that are coming in under the real account and what are the expenses and incomes, we need to know that, right? So we know what are personals. Actually, by seeing the names we can recognize that those are the persons. By seeing the companies names we can recognize that those are artificial persons, right? Bank names, companies names, so we can identify them very easily. But coming to the assets, see here we have a main list of assets. So these comes under actually real account, right? Real account records only the assets. If the asset is coming into the business we have to debit, if asset is going out of the business we have to credit, right? So here the important assets we are going to get in the problems, mainly the machinery, furniture, cash, bank balance, buildings, etc., right? So these are the important machinery you have to important assets you have to remember while doing the while considering the real account, right? And the expenses, these come under nominal account, right? Nominal account records all the expenses and losses and all the incomes and gains, profits. Okay, so all the expenses have to be debited first of all. So what are the expenses we are going to get in the business? Mainly are paying the salaries to the employees, paying the wages to the workers, rent is paid, paying the rent, commission paid, interest paid, discount allowed, all these comes under the expenses, right? If we come to the incomes, so whatever we are receiving in the form of income, like rent received, commission received, interest received, discount received, all these are the incomes for the business. So all these have to be credited, these have to be credited and expenses have to be debited. Okay, so now we came to know what are the things we need to consider while making the journal entries. We came to know the rules, we came to know what are the items we are going to get, and we came to know the transactions, right? So here we have to remember some important points while noting the journal entries, while recording the journal entries, right? So what are the important points? Let's see. Yes, see here some important points you need to be noted down whenever you are going whenever you are doing the journal entries, right? Whenever you are recording the journal entries. Here, when the goods are purchased, first one, when the goods are purchased, purchases account has to be debited, not the goods account. You should not write the goods account. Okay, when you are purchasing the goods, purchases account has to be debited. Okay, so whenever you are selling the goods, same format will be followed, but you are selling the goods. Goods account should not come. Sales account should come. Sales account has to be credited. So in a short form you can remember, purchases account, whenever you are purchasing the goods, purchases account has to be debited, and whenever you are selling the goods, sales account has to be credited. Purchases debited, sales credited. So it applies only for the goods, not for the assets. Okay, not for the assets, only for the goods. If you are purchasing the goods, those are purchases account has to be debited. If you are selling the goods, sales account has to be credited. And one more important point, whenever you are starting the business with the goods, you have to debit the stock account, because goods are coming into the business with the name of stock. Stock account has to be debited. You should not write the goods again over here. Okay, you have to consider these goods as the stock So stock, in the name of stock, you have to, stock account has to be debited over here. So simple things you need to remember. If you are purchasing the goods, purchases account has to be debited. If you are selling the goods, sales account has to be credited. Whenever you are starting the business with the goods, stock account has to be debited. Okay, so now we are ready to make the journal entries. Okay, we'll do one problem, so you will get the clarity how to make the journal entries properly. Yeah, see here. Here was first question, from these transactions, all these transactions, you have to prepare the journal entries, right? So analyze the following transactions to the traditional approach. You have to analyze all these transactions and you have to pass the journal entries. Okay, so here Nazir started his business with cash, borrowed from Lytton. So this is the loan you are borrowing from the Lytton. Purchased furniture. Purchased furniture from Kamrul on credit. Purchased goods for cash. Purchased goods from Anup on credit. Sold goods for cash. Sold goods to Shanup on credit. Received cash from Shanup. Paid cash to Arup. Cash deposited into the bank. Withdraw cash for personal use. Withdraw from bank for office use. Withdraw from bank for personal use. Received check from a customer Shanup at 5 p.m. Okay, so from these transactions you need to record the journal entries. So we'll find out how to record the journal entries here. Okay, see here, Nazir started his business with the cash 50,000. So what is happening here? Nazir started his business with the cash. So business is different and Nazir is different, right? So from the point of view of business you need to think. So he is starting the business by putting some cash 50,000. So cash is coming into the business. So whatever comes in has to be debited. Here Nazir is the giver of cash to the business. So Nazir account has to be credited. So according to the personal account rule and according to the real account rule, we need to pass the journal entry. So from the business point of view, the journal entry will be, if date is not given, you just enter the numbers or the letters, but date will be given in your examination, right? So by starting the business, cash will be coming into the business. So cash account has to be debited whatever comes in, right? Who is the giver of the cash to the business? Nazir. Nazir account has to be credited, right? How much cash they are giving? Actually 50,000. On the debit side you need to write down on the debit column, on the credit side you need to write down on the credit column. With this we have to pass some narration. Narration is nothing but it is the explanation of the transaction, which type of transaction you are writing and which, why entry, the above entry explains the transaction, why you are writing this entry. For this you are giving the explanation, so that is called as narration. Why you are writing this entry? Because the business is started by giving some cash. So before writing the narration you need to start with the word being. Being, business started with, business started with. Here you need to mention it as the capital. Why? Whenever we are starting the business, whatever the cash or whatever the goods or whatever the assets we are putting into the business, those are all considered as the capital for the business, right? So here Nazir's account, in this place you need to write down Nazir's capital account. Okay, Nazir's capital account you need to write down whenever you are starting the business. So this is the most important thing you need to remember. Nazir's capital account you have to write. Okay, next, borrow from
Return. Borrowing means getting the cash on the debt. Okay, from in the debt format we are getting cash from other persons, right? Borrowing means getting the cash on a debt form. What is the debt? You know what is debt, right? Bakil antam kada, so that is debt. Borrowing means you are getting the debt from the litan. So litan is the giver of the debt, right? So in this case what you have to do, cash is coming into your business by receiving the debt, cash account data to Litan is giving the cash to you. So Litan is the giver. Litan. But here what you have to write? Loan from the Litan. You should not write the Litan directly. Loan from Litan, because you are borrowing cash, right? The Litan is not giving cash in the simple way. You are borrowing the cash, so this is the debt to you. You need to mention why you are borrowing the cash from the Litan. So it is considered as the loan from Litan. Okay, so loan from Litan is 20,000 you have taken. 20,000. Okay, the narration will be being cash borrowed from Litan. So in this way you need to write that. Okay, next. Next, what is the transaction? Purchased furniture. Okay, purchased furniture. So whenever you are purchasing the furniture, furniture is the asset. So furniture is coming into the business. So whatever comes in, we have to debit that furniture account data to. How you will purchase? By giving some cash. So cash is also asset. By purchasing the furniture, cash is going out. So whatever goes out, we have to credit. So what is the amount? 5,000. 5,000. Okay. Being furniture purchased. Okay. So don't go with the journal entries. I'll explain you in a simple way. So whenever there is a sale of machinery, whenever there is a sale of machinery, transaction is sale of machinery. So whenever you are selling any asset, that is going out of your business. But by selling something, what is happening? You are getting some cash, right? So cash is coming in and machinery asset is going out. So in that case, what happens? Cash account data to machinery account. Okay, example 10,000 you have sold. For rupees 10,000 you have sold. So what will be the narration? Being machinery sold for cash. Okay, next important entry will be cash purchases. Whenever you are purchasing the goods on the cash basis, the entry will be, we already discussed that purchases account has to be debited. Purchases account data, debited means on the debit side you need to write down. On the data debited side you need to write down. Purchases account data to, this is credit side and this is debited side. This is credited side and this is debited side. Purchases account data to cash. Whenever you are buying something, the cash will go out. Example, you can take down 5,000. Okay. Next important thing, cash credit purchases. credit purchases. So sometimes the transaction happens on the cash basis and sometimes on the credit basis. So what happens if the cash basis transaction happens? So immediately we are paying the cash, it closes over there. Purchases account data to cash account we have to write down. But whenever there is credit purchases, it means you are purchasing something from some other person. Example, purchased goods from X. From X person you are purchasing the goods. So what will be the entry? As usual, purchases account data account has to be debited, and from whomever you are purchasing the goods you have to write down their name instead of cash. And other thing, here whenever you are purchasing the goods from X, X is the giver of your X is the giver of the goods to your business. So giver has to be credited. So simple thing you need to remember. Giver has to be credited. Purchases we are making, so purchases account has to be debited. Purchases account data to X account for the credit purchases. Okay. So 10,000. Next important entry, H. Whenever there are cash sales. So whenever you are selling anything on the cash basis, what happens? Cash is coming into the business. So previously we discussed that sales account has to be credited. So cash account data to sales account you will get. Okay, example 20,000. For 20,000 rupees you sold the goods. So what happens? What is the entry? Being goods sold for cash. Okay, this is one more important entry. And credit sales. If there are any credit sales, what happens? So we are not receiving here the cash. We are selling the goods from other person on credit basis. For example, sold goods to Ravi on a credit basis. So Ravi is the receiver of the goods. So Ravi has to be debited. Ravi account data. As usual, sales account has to be credited because sales transaction is going on. So 30,000 you can take down. So the narration will be being goods sold on credit. Okay, and next important point, whenever you are paying any expenses, suppose example you are paying salaries. When you are paying any salaries, what will be the entry? Expenses are debited, right? According to the nominal account, expenses are debited. So salaries are the expenses. Salaries account has to be debited. Salaries account data to whenever you are paying the expenses, cash will go out obviously, right? Without paying the cash, can you meet the expenses? No, right? So in order to meet your expenses, you have to pay the cash. So cash will obviously go out of the business. So what will be the narration? Being salaries paid. Okay, it applies for all the expenses. If you have paid wages account data to cash. If you are paying rent account data to cash. If you are paying commission account data to cash account. In this way you need to write down the journal entry for all the expenses, right? Only the name of expenses will be changing, but everything will be the same. If you are paying salaries to cash. If you are paying wages to cash. If you are paying commission to cash. If you are paying any interest to cash. In this way you need to write down the journal entry, right? And other one, okay, if you are receiving any income received. if we are receiving any income. So whenever you are receiving the income, you will get the cash into the business, right? Whenever any person, for example, you are running an apartment, right? Apartment running is your business. So you will receive the rent. How you will receive the rent? In the form of cash. So cash is coming into the business whenever you are receiving any income. So cash will come into the business. According to the real account, cash has to be debited, and rent, in the form of rent, you are receiving the income, right? So example, rent received, cash account data to rent received account, example 5,000. Being, narration will be being rent received, thus. Okay, see here, it applies for all the incomes. If you are receiving interest, cash account data to interest received account. If you are receiving commission, cash account data to commission received account, right? If you are receiving any what Mm. So other incomes, if you are receiving any other incomes, cash account data to other incomes account you will get. So for the expenses account data to cash account. For the incomes, cash account data to incomes account you need to write down. Okay, so all these are the very important journal entries you are going to get in your examination. Okay, so I hope this is clear to you how to write the journal entry for the transactions. Okay, thank you.